All right, ladies and gentlemen, I'm here with my trusted go-to mortgage broker, Alejandro. Alejandro, I'll let you introduce yourself to everybody.
Hey there, guys. How are you doing? My name is Alejandro Costa. I'm 35 years old and I'm the CEO of DSI Mortgage Brokers in Portugal. We work nationwide in islands. It's 60 of us and we love what we do. I'm
Awesome.
naturally from Spain. I was born in Malaga, right next door. Uh, and I can say I'm Iberian, like the ham. Uh, so yeah, I love Portugal. I've been living here since I was 4. I go to Spain a lot, but Portugal is my favorite place, my
Mhm.
favorite spot, my sweet spot. So basically, as mortgage brokers, we grew, and now we have a consolidated position near the banks. We work a lot with non-residents, US, you name it. So Europe, outside Europe, UAE, and so on and so on. We love what we do, and basically, as a man, I love passing on to my kids also that we have to be smart when it comes to our financial life.
Mhm.
So that's what I try to do with my clients too. I graduated in law, so my master's degree also is in international relationship and political science. I took it in a Catholic university in Lisbon, and basically, I dropped in this business by a chance, and I love it. I also have other businesses. I have a lawyer's office of my own too, and I love what we do. Okay, so we're speaking about mortgages today, right? Right,
Yeah.
Joseph?
Yeah.
Okay, so when it comes to mortgages, the basic questions that are put by the clients are, so what are the conditions for residents versus non-residents?
Mm.
What is the term? How long does it go up to? Um, what's the loan to value? What's the rate? So these are the basic questions we get, right? And usually I say that the conditions are pretty the same for non-resident for the non-residents as they are for residents. The big difference is loan to value.
Mhm.
So to mitigate risk, to minimize risk, the Portuguese central bank says to the banks, hey, listen, you guys should not go above 70% loan to value. Okay. And this is the Portuguese central bank's recommendation.
Mhm.
But because it's a recommendation, some banks go up to 80%. And this is the highest point that the banks go in Portugal for non-residents. So
Mhm.
means that let's say a US, UK client needs to put down at least 20% plus tax.
Mhm.
But then, of course, if there are clients that are living in the US for many years and they are US citizens, but also they are Portuguese citizens, then we can go up to 90%. Okay, that's important to state too.
Yes.
Of course, the Portuguese central bank's recommendation is for the loans not to go above 75 years of age. It's up to 75 years of age, counting on oldest of the applicants. Okay.
Mhm.
And of course, once again, because it's a recommendation, some banks push it up to 80 years of age when the clients are older than 50 years old.
Mhm.
Okay. So uh, our job as mortgage brokers is to analyze the profile of the client, shop around. So basically, we go to many different banks.
Mhm.
And what we do is we select the banks that we believe that will match the client's profile. And we at least give 3 to 4 to 5 simulations from different banks.
Mhm.
And then we advise the client on which one to take, basically. Um, I love working with non-residents because of the deal closing, and when I meet the clients in real life, flesh and bone, it's
Yeah.
really because when they come really nostalgic and they want to close their deal, and we've done it like miles away from
Yeah.
them. It's a really nice feeling. So it gives us a rush to me and all my team, I believe.
It's a nice
Uh,
challenge.
Yeah, it's a nice challenge, but it is actually when clients from the US, UK, they see what rates we have in Portugal and in the EU, generally, they're like, whoa,
Yeah,
3%,
eyes get this big, like this is good. Yeah.
yeah, cheap money, let's go for it.
Yeah.
And usually we're 50% less than in the US,
Yeah.
let's say. Now we can get, actually the rates went down a bit now, so we can get now 2.7 percent rates,
It's amazing.
uh, fixed for 2, 3, 5 years, the
Hmm.
first 5, because we use variable, mixed, and fixed rates. So the variable rates is when you use Euribor only plus spread. So Euribor is the European offered rate, right? And we can use 3 months Euribor, 6 months Euribor, 12 months Euribor. A 12 months Euribor means that the mortgage gets reviewed every 12 months. The
Mm,
6 month Euribor means that it gets reviewed every 6, then 3. Of course, usually the 12 months Euribor is more expensive than the 3 months Euribor, okay? Because the risk is also different, okay? Well, a 12 months Euribor, it's actually better for the client because only yearly it gets reviewed,
mhm,
okay? But as the rates are going down now, I would either go variable or short-term fixed,
mhm,
uh, because in Portugal you have early redemption penalties. So if you fix for a long time, for the whole term, and then you want to change to a variable, or you want to change your mortgage in some way, you'll pay a 2% penalty,
mm.
the amount that you still owe the bank. So like,
Is that out of pocket or does that get rolled into the mortgage? So it comes out of your pocket.
it's out of your pocket,
Mm,
unless because, and I'll tell you the catch. So the 2% penalty is if you're using a fixed rate and that comes out of your pocket. So 100,000 euro mortgage, if you change or you pay it off or something, if you touch the rate, you will pay a 2,000 penalty
mhm,
if 100,000 euro mortgage. However, if you're using a variable rate, though, it's a 0.5 penalty if you do something, if you sell, if you change banks. And usually, if you change banks, the bank where you changing it to will cover the 0.5 that you need to pay.
mhm.
But these are promotions that the banks do. It doesn't mean that it's always like that, but usually it happens. Okay. It's negotiable. Let's say.
Yeah.
Let's also, one of the main questions that we get from clients is, okay, how do lenders calculate DTI, debt to income ratio? In the US, for example, they calculate based on the gross income. Here is
Mhm,
based on net income. So basic example, if I live in the US and I have a $2,000 net salary monthly, and I already have a mortgage of $1,000, means that 10% of my net income is going into debt already.
mhm,
Okay. In Portugal, the effort rate, they call it, is the perfect is 35%,
mhm,
the perfect one. So if I have 1,000 uh, as a mortgage, I can have 2,500 more in monthly installments because that's the maximum banks in Portugal should consider. So it means that in Portugal, doing the conversion, the rate conversion on the currency exchange,
mhm.
you can have more or less 2,000 to 2,500 euros in a monthly installment to buy a property in Portugal.
Okay.
And of course, to calculate that, we just need basic information. Usually we pre-approve a client in the first meeting if they tell us what we need to know. Basically, we need to know if the client is transparent and tells us, listen, I have a net salary of X, my expenses are Y, and I need I want to buy a property of alpha or beta.
Mhm,
Okay, then we can do the maths. Okay, then age, the price, 20% down payment, 6% IMT and stamp duty, which is the tax. And we give all the numbers to the client, and it shows green, yellow, or red. And that's okay, good to go. Then we need the forms. If it's in the UK, the P60s. If it's in the US, W2s, 1040s. You know what it is.
Yeah.
And of course, we'll need the credit reports, the Equifax, Experian, TransUnion credit reports, all of that, to submit to the bank's risk department. Because usually when we pick a bank, that bank will need to submit the file for the risk department, because for non-residents, usually it needs to be approved by the risk department of the bank. The whole process, this is another frequent question, is, okay, how long does it take? Okay, that's a nice question.
Yeah,
From the moment, I prefer to say like this. So from the moment that we have all the documents, it takes us a week and a half to properly approve a file. So have the approval from the risk department.
Yeah.
But is that the full approval? No. Why? Because the bank's main guarantees are the property itself and the ability of the client. Oh, nice.
Thumbs up.
So they need both. They need the property and the solvability of the client together. So if I'm approved on solvability, it means that I can pay for the mortgage. Let's see if the property is valuated at the price at least. Okay, let's do valuation.
Yeah.
There it goes again. Let's do the valuation of the property. Okay, because if I'm lending if I'm lending you, client, 80%, it's 80% of the valuation. If the valuation comes below, then it comes lower than the price, I will lend you 80% of the valuation. You'll need to put down the difference. Okay, that's something interesting and important to state.
Yeah.
And usually what happens is, when the mortgage is the first thing to do, because if you do not have a mortgage approved in principle, what will happen is you find a property you really love in Portugal, and properties in Portugal move fast.
Yeah.
There's, like, you blink and they're sold.
Yeah.
So when you find the property, it's better you have a mortgage approved in principle. Why? Because when you move and you want to put an offer, the seller accepts and will push you to sign the promissory contract.
Yeah.
And the promissory contract in Portugal, it's called CPCV, Contrato de Promessa de Compra e Venda, and it's a contract in which the buyer promises to buy and the seller promises to sell. What's the catch? The buyer puts a 10%, usually 10%, it depends, it's negotiable, but 10%, we call it sinal, in which I say, okay, I'm committed to the deal, so here's 10%. In case I do not fulfill the contract, that you can negotiate the term, like 3 months, 4 months, 6 months, a year. If I do not fulfill in this timeline, you, seller, may keep the 10%. Okay, but if you, seller, do not keep to the promise that you made of selling the property and you sell to somebody else, I have two options. I either get double what I gave, 20% back, or I go to court and demand that this property comes to me. There's two options.
Yeah.
Okay. Okay. Oh, nice. No balloons. I like this.
These things pop up all the time.
So basically, this is important because if I have a mortgage approved, I do not need to go through this stress. Okay, I do not need to go through this hustle. And this is our job, basically. Okay, to avoid the clients to go through this stress.
Yeah. Yeah.
Okay? Make it simple. Then, of course, the timelines. If I have a mortgage approved in a week and a half after I give all the documentation, the next step is the valuation, which takes around 1 week or 1 week and a half between doing the valuation and having the report of the valuation. So we have 2 weeks, 3 weeks to then another week to issue the final approval letters that will state all the conditions of the loan, including the report of the property's valuation. After that, we can schedule the deed. So let's say a month to do all of this. But there are some timelines that we cannot go over. For example, cool down period, it's mandatory by law. It's a period in which the client thinks if he really wants to go through with the mortgage. So basically, it's a timeline the law gives the client to rethink his options. Okay, it's mandatory. We cannot go over it. 7 days, running days. And together with those days, we have 10 days of preemptive rights in which we put in a portal that if someone has some right over the property, that should come forward and state publicly that they have some right. Oh, it was my grandfather's or the town hall. No, this is a cultural location and we need to buy it ourselves. And then they move forward and they buy it themselves for the price that is stated. Okay. So this basically almost never happens. Okay. But 10 days that run together with the 7. So we have plus 10 days. So I would say that 1 month and a half would be the maths to do well, to make it safe, 2 months to do the final deed. Okay. Because then the seller needs to be available too for the deed.
Right.
So it's a marriage between the two agendas. And of course, this is basically how it works with mortgages in Portugal. There is much more to say. So on and so on. But yeah, this is what we do. This is what we like, what we love to do, and this is what we go for. Of course, the last question, and not last but not least, is how much are your fees, mortgage brokers?
Yeah.
I would say it's 0 because we do not get paid by the clients. We get paid by the lenders. We have we are binded by a contract with the client, with the banks, in which we cannot receive commissions. We cannot legally receive commissions from the banks, but we accept bottles of wine.
Nice.
I'm joking.
Yeah.
Or not. But basically, we cannot receive commissions from the clients because we receive from the banks usually 1%. Okay. What happens is this amount, the 1%, doesn't go in the monthly installment of the client, directly or indirectly. Okay. The client doesn't pay for our, well, indirectly, we could say yes, but it doesn't go in the mortgage. There is not 0.1% that goes in the mortgage of the client to pay our commissions. Completely
it's not added on to the actual the mortgage itself. Yeah.
By law, it's forbidden. You can Google that.
Yeah.
So basically, the clients get a free service. It's not for free, but for them it is.
Yeah.
And what we do is we protect the client's interests because we do not represent the banks. We represent the clients. Okay. And basically, summing that, wrapping it up, this is pretty much what we do and what we like to do with your clients, Joseph, is to give a good service. And we've been struggling to manage with so many clients, which is good.
Yeah.
It's because you do a great job. And I'm looking forward to our partnership growing.
Yeah. So, ladies and gentlemen, so the reason I work with Alejandro reached out to me some time ago. And the thing that I loved about Alejandro is, one, how professional he was, very knowledgeable. And then he has an expansive team across all of Portugal. And I think that's really important whenever you have people that are in your different markets and somebody like Alejandro that has a team member, so that if you have specific questions about markets, of course, the mortgage broker's job is to get you the mortgage and help you through that process. But then they know where the restaurants are. They know some of these things, so you can ask some of these questions. And I think that's very helpful, what we call boots on the ground, to be able to ask these questions. And then beyond that, the other thing that really struck me really well with Alejandro was the relationships that he has, right? Being here as long as he's been here, doing the job that he does, he has lawyers in place that help us. He has obviously different agents that are in different markets that are able to help us. So he has this package that allows us to say, hey, Alejandro, and he probably gets 10 messages from my assistant Eva every day, and many of you will meet her. And Eva's asking like, hey, do we have an agent in this market that we can make sure that we're, getting a client to? Hey, do we have a lawyer? Now we have 2 lawyers that we utilize through Alejandro's team. So when we're talking about working with Alejandro, it's the professionalism, the networking, the relationships, and of course, how straightforward he is about what he does in his business. And so as you're looking to have this relationship with him, you'll obviously see him here on video, but the type of person that you're working with is going to be able to get things done for you. Alejandro, one question that I have is, what are some common pitfalls or myths that expats have whenever they're getting ready to buy here? So for example, one of them that you brought up to me, I have a lot of Portuguese citizens who are also American citizens or have made their money in the US, are now coming back home because they want to be back with obviously their culture, and that's natural movement. And they always ask, like, Joseph, I'm coming back, what type of mortgage can I get? Where you said just now they can essentially get the, I don't want to call it standard, but the standard Portuguese mortgage of a 10% down payment. What are some other things that people ask you, or you're like, no, that's not true, right?
Okay. In that specific example, the idea of having 90% loan to value, being an American citizen, but also a Portuguese citizen, when the client comes to Portugal and is applying for a 90% loan to value, we have to keep in mind that if it's for primary property, meaning that is Portugal, okay? If it's a secondary property, it will still be 80% loan to value. So only if the client wants to move to Portugal, then it will be 90%. Okay, and he needs to prove that the income he receives from his abroad company employer will go on because he will be working remotely, let's say. So there are some catches to it, and of course the new law, for young people, is also there are some catches that we need to understand. It's great. It's for residents. It doesn't even need to be Portuguese. It needs to be residents. Okay. Portugal. For the first house they buy, for HPP, so habitação própria permanente, which is primary property. And they can, if it's their first house, but they add another property less than 3 years ago, it won't work. Okay. If it was more than 3 years ago, then yes. The client needs to be 35 or less, and they do not pay the 6% IMT stamp duty, which is good.
Yeah.
And the law also states that there will be a guarantee to buy the first property given by the government, so 10%. So basically the thing is to have 100% financing.
Yeah.
However, because it's a complex situation, because it will higher the risk of the banks and the government.
Yeah.
The Portuguese Central Bank is working together with the ECB, the European Central Bank, to better understand how they can mitigate and reduce risk from the banks, and what the rules will be for the banks to apply with together to mitigate risk. So at this present moment, we still do not have a lender that will approve this 100%, but we are moving fast to get it done. The Portuguese Central Bank stated that they needed 2 more weeks. So let's see how long that will take. If we will have it in October, November, but soon it will happen. So for all of you at home that are residents in Portugal, but are, let's say, US citizens or UK citizens, but are already tax residents, okay? You can apply for this measure if you are 35 or less.
Yeah.
Which is good. The builders need to start building because we need properties.
Yeah.
And I believe it will bring some dynamic to our market.
Yeah.
And it will help the Portuguese to move forward to purchasing their first property, which usually it's not an easy task because salaries in Portugal are not that attractive yet.
Yeah. Yeah.
Okay, so
Well,
basically,
a couple of things that, well, first off, whenever I just want to reiterate this, those of you who are watching this and you're probably coming through, Alejandro is going to be your mortgage broker if you decide to work with me. His team will be managing your file to make sure they get you pre-approved, get your approval, and help you through this process. So hopefully you can tell Alejandro's very knowledgeable. He also gives information that you probably don't know about yet, even on this call, right? And I think that's really important for those of you to know. One thing that I was thinking about Alejandro, I was talking to Eduardo, who's one of our friends, our common friends, and I said, one thing that California did well, not California doesn't do a lot of great things. They have good weather, right? But when it comes to finances and managing stuff, some people agree, some people disagree. But they did this first-time homebuyers program, very similar to what Portugal is doing right now for first-time homebuyers. They did, but the 35 and under here is they said when the property sells, in order to mitigate risk for the government, when the property sells, the government gets back their money on the sale of the property, and then the owner of the property then receives whatever the gain is, right, that is left over. And I thought that was a really interesting situation. So I don't know if the government will do anything like that, but it helps protect the banks, one, but then helps protect the entire country from a banking perspective to make sure that these properties that are being moved and the entire country's banking system stays protected, right? So I don't know if that's something that they're considering.
it's a good measure. It's a good measure.
Yeah.
One of the measures they already applied within the law is that the clients that buy under these circumstances, they cannot sell the property for the first 6 years or rent it long or short term
Yeah.
for the first 6 years. Why?
Yeah.
Because if me, government, I'm helping you, I'm hoping that you are really buying because you need it,
Yeah.
not because you want to do investment out of it. Of course, we could look at it in another perspective, but basically it's the government trying to say, hey, this is for people that really need it, not for real estate speculation.
Yeah.
So this is one of the measures they already did. Of course, when it comes to capital gains and all of that, let's see what they do next.
Yeah.
Looking forward with these properties, let's see what happens.
Yeah.
But for now, these are the measures they applied.
Love it. Well, our time's coming to an end because I've got to get on a call with one of your partner agents in just a second. Our partner agent, Alejandro, I appreciate you. Anybody that watches this video, Alejandro is going to be your guy. Obviously, his contact information, whenever you receive this video, you'll probably be introduced to him through WhatsApp and email so that you can have a conversation with him, make sure that, he's able to get everything he needs. Alejandro, one thing that I'll ask is maybe a checklist for a lot of these people as they're getting ready to come to you, so they can have this stuff prepared before they even get on a call or start emailing back and forth with you. And we'll talk about how to possibly get that. But we really appreciate you, Alejandro. You're helping our clients. You just got one massive pre-approval, and we look forward to the continued relationship.
Thank you, Joseph. I will send you the checklist in a minute. And thank you once again for trusting. Okay.
Absolutely. Have a great